My name is Joe Hamilton. I'm the chairman and the CEO of Unigold. I'd like to welcome the participants to our first webinar. This seems to be a better way to give presentations and information updates than face-to-face meetings in these times of COVID-19 and self-isolation. I'd like to indicate to the participants that their microphones are generally muted. There is, however, a question and answer box, which I think you can find towards the bottom of your screen. I have that box open. Feel free to type in questions as we go through this presentation, and I'll try to answer them on the fly. If not, we can open it up for, once again, typed questions and answers towards the end of the presentation. I assume that you can all see the Unigold corporate presentation that's on the screen. Some things I say here are subject to change in the future, but we will give you the information as we see it today, but some things are forward-looking statements. Management. A few weeks ago, we announced a change in management. Our Chief Financial Officer, John Green, who'd been with the company for about 10 years, retired. Donna McLean took over from John. Don has got over 30 years experience working with a number of publicly and privately traded companies. She has assumed the role of the CFO. That's about the only change to management. Wes Hansen continues as the Chief Operating Officer, and I am still here as the Chief Executive Officer. For those of you who aren't familiar with our board of directors, I've been the chairman of the board for about 10 years now. I took over as Chief Executive Officer in October last year after we raised money and got back to work in the Dominican Republic. The capital structure of the company, the market cap hasn't changed much. We're still at about $10 million in market cap, although we have come off significantly from our highs of 25 cents at the beginning of January. You'll see on the share price chart that in the end of September, when we got back to work, September, early October, we had an initial share price jump. The issue that we did, the share issue that we did in September became free trading in January, and you'll see a fairly large drop as some of those free trading shares hit the market. Our existing shareholders, Eric Sprott owns about 13% of the company. Osisko Gold Royalties has maintained their position at about 11%. Monarch Gold owns about 8% of the company at this point. Evanston, Rob McEwen's investment fund, owns about 8%, and the officers and directors combined own about 7% of the company. Our 2020 objectives, the Oxide resource, we'd like to do an M&I resource on that towards the end of the year. Part of the plan was to put together a larger resource and to drill that out to find where the transition to oxide boundary was. We did that at the beginning of the year and released those results. We've done some preliminary metallurgical studies to finalize the process design. I'll get into that a little bit towards the end of the presentation, but initial results showed that we could get about a 90 to 95% recovery in very short order with direct cyanidation. We've just commenced some column test studies to see whether this could be heap leachable, which would, of course, reduce capital on the oxide. The objective then would be to complete an economic study on the starter pit by the end of the year. The sulfide resource, we'd like to complete the infill drilling, which we've done most of that at this point, and move some of those resources into the measured and indicated category. We're doing metallurgical studies right now to try to finalize a process design. I'll speak a little bit about that. And then we'd like to, of course, try to decide how we're going to attack this, whether it's an open pit or an underground. And we'd like to expand the mineralization as well. And of course, we want to keep up with our CSR programs. It's important to keep the community engaged in the Dominican Republic as well as it is any place else in the world. As a historic overview, our open pit resource, which was put out in 2013, was a 2 million ounce resource at about 1.6 grams of gold per ton. That was at a $1,500 pit. So today, that pit-constrained resource is still valid. It was done with fairly wide-space drilling at about 100 meter by 100 meter grid spacing. There were some oxides that were in that, as well as some mineralization that occurred below the pit. There is a resource statement towards the end of this presentation, which I'll show you and highlight that. In 2015, however, with the gold price slide, if you recall, in 2013, 2014, the gold price slid from $1,500 to about $1,100 before recovering. In 2015, we did another resource estimate at a $1,200 gold price, but with a much higher cutoff. So we went to about 900,000 ounces at about 5 grams per ton at a $1,200 gold price. It utilized the same database with not much more drilling. And we also included about 40 million pounds of copper at about 1/3%. But in 2016, there were new high-grade discoveries that changed the game. And those high-grade discoveries, although we knew about them in the pit, they were fairly wide-spaced and therefore very difficult to show any continuity between the 100-meter centers and drilling. So we went back in 2016 and started drilling out some of those high-grade to show continuity, and we certainly had some great success, and I'll show you the results of that. And in 2019, when we went back to work, we continued to expand on those high-grade hits. In the Dominican Republic, the Nieta Concession is against the Haitian border on the western part of the country. There's a star which shows where Pueblo Viejo, Falcondo, and Cerro de Memon, which are the three operating base metal mines and gold mines in the country. Pueblo Viejo is about 800,000 ounces of gold a year. Barrick owns 60% of that. Newmont owns 40%. It's arguably Barrick's number one operation in the world. They're putting a combined $1 billion to expand the tailings facility and do some pre-stripping and preparation for freeing up about another 12 million ounces of gold. And they intend to go to about 1 million ounces a year from that operation. It's a mining-friendly country. They certainly understand mining. It's an area that has 5 international airports and deep water ports as well. The established mining law is certainly there. There's a 5% export duty on finished metal and a 25% income tax, and that's about it. The Pueblo Viejo mine, however, is under a different fiscal regimen than any other mine in the country, simply because it was a contract with the government that Barrick and Placer Dome previously negotiated. So it's outside of the mining law. They have a completely different fiscal regimen, such that the government ends up with about a 50% economic interest in Pueblo Viejo, simply because the government owned the operation prior to Barrick or Placer getting involved. Any new exploration, however, should fall under the established mining law that's there at this point. A note on COVID-19 in the Dominican Republic. The first case was confirmed on March 1st, 2020. As of yesterday, or March 24th, there were 312 cases had been confirmed in the country, with 6 deaths reported. On March 19th, there was a presidential decree that closed the borders. The commercial flights are still allowed to depart, but no other people are allowed to enter the country. The commercial business activity was suspended, with the exception of supermarkets, convenience stores, gas stations, very similar to Ontario and Quebec. Schools are closed through April 13th, and civil servants or people who are over the ages of 60 years or anyone with a pre-existing health condition has to stay confined to their residences. Unigold brought their expat employees back to Canada on March 15th. Work was stopped with the presidential decree, and work remains suspended until most likely the middle of April at this point. There's a map that shows where the COVID-19 cases have been identified in the Dominican Republic, as well as the position of the Nieta Concession close to the border. There are no reported cases in the area where we are working. We certainly hope it stays that way, but we'll keep monitoring the situation over time. On the Nieta Concession, this concession has been awarded to us. It comes up for renewal in well, it lapses in 2023. We'll have to reapply for it. The existing concession holder has the ability to reapply with almost an automatic renewal, although you do have to go through the application process every 5 years. You'll see that we've spent most of our time operating at the Candelones area where my cursor is. Since 2011, we have put most of our drilling effort into those known deposits. There are, however, a number of other deposits along the Torrio gold trend. 4 of them in particular are drill ready at this point, and we would be looking at some point in the next year to be able to move out and try to assess those as well. There are a number of other copper and gold copper showings, some of which have some short drilling, but all of them have surface geochemistry and geophysics done over them, and some of them have some short exploratory drill holes into them. But once again, all of our effort has been on the Candelones concession, on the Candelones mineralization between Candelones Main and Candelones Extension in the far southwestern part of the project. To give you an idea of the conceptual model for the Candelones mineralization, this most likely started as a seafloor vent. Volcanogenic massive sulfides were deposited under fairly low confining pressure or under low water depths, probably less than 100 meters of water. There's a picture of drill core down in the lower left corner of the slide, which shows you the very fine-grained nature. This is almost 100% pyrite. Very fine-grained nature of this initial mineralization. This particular style of mineralization, which is in the bedded sulfides, is generally low-grade gold, runs about maybe 100 ppb to 500 ppb, or 0.1 to 0.5 grams per ton. Relatively uninteresting, but it's the first phase of mineralization. As things carried on, there was ash, acidic ash, which was deposited at the seafloor basin, covered some of these mounds that had been built up. And then a second event of andesitic composition, ash and pyroclastics, was deposited on top in a fairly thick sequence, which created more confining pressure. And as you can see, allowed copper and some replacement to start happening within these mounds, which is in the drill core picture on the lower left as well, which is fairly standard in volcanogenic massive sulfide deposits. They are replacement deposits, generally chalcopyrite and sphalerite replacing pyrite. As time went on, of course, though, in continued volcanism, there was earthquakes, tilting, faulting, and some brecciation in the drill core that you see here. You can see very clearly that there's dacitic pieces of rounded clasts that are included within a breccia, but this is almost entirely cemented with silica and sulfide cement. This specific picture ran almost 2 ounces of gold and about 3 to 4 ounces of silver over this interval. But once again, this is brecciation through fracturing, and then the systems keep going and deposit higher grade sulfides where they're actually cementing the breccia. As things carry on, of course, the faulting carries on, earthquakes carry on, things get displaced, but the systems are still active up the faults and up the main conduits. A third style of mineralization that comes in is shown in the drill core at the bottom, where there's significantly more quartz, there's alunite, significantly more anhydrite, and of course you can see the sulfides, both the chalcopyrite and the pyrite, coming through in a cemented mess with no clear orientation. But these are really the feeder style of mineralization, and this is a much later event, also carries fairly high-grade mineralization. So the three styles of mineralization, to recap, that we see at the Candelones is the initial VMS, a secondary system of disseminated pyrite, which runs about 1 to 2 grams around these VMS, and then, of course, up the feeders, and in the cemented breccias are higher-grade mineralization, which is a third or later stage. To give you an idea of what it looks like today, here's the Candelones main hill. The andesite-dacite contact is shown, and below the andesite-dacite contact, within the proposed pit area or the pit-constrained resources, you can see the higher-grade mineralization at A, B, and C is shown. There's about 100,000 meters of drilling shown on this slide at both the Candelones over to the Candelones extension. And to give you an idea of what some of the higher grade hits that we got in 2016 through 2020, at target A, this is really a massive sulfide, but it is a VMS deposit that's been brecciated and cemented with sulfide cement. And it's the secondary sulfide cements that seem to carry the grades. Fairly thick sequences through here, 35 meters at 6 grams with about 0.5% of copper. You can see that as these go down, the grades are remarkably consistent through this mound, somewhere between 5 and 9 grams for the most part, with a significant amount of copper fairly consistently throughout this mound and through target A. And I'll show you a little bit more of the target A and where it sits in the pit. Target B, which is a feeder close to target A, also has some fairly high-grade gold in places higher than target A, but this is clearly a feeder with silver and zinc coming in as well. You can see that there's some pretty substantial widths in target B as well of 20 meters, grading anywhere from 5 grams to 20 grams of gold per ton. Target C is on the west end of the pit. It is not as well drilled as target A or B, but once again carries a different zonation with more zinc and silver seen, but certainly the gold grades here are consistently higher than they are at target A and B. The results that we put out on Monday came from target C, but there are some fairly good widths in here. 10 meters at 12 to 13 grams is fairly normal at some of the hits that we're getting at target C. Just to give you a cross-section, something that I want to highlight about the mineralization and the disseminated mineralization, which is really the cloud. The high-grade mineralization that we find is usually contained within a lower-grade halo. This section, which is from target B, gives a pretty good indication. If you look at some of the intersections in the drill core, we've got 1 gram per ton over 200 meters. But inside of that, there was a 24-meter section that ran consistently over 3 grams. The same thing with some of these other ones, almost 2 grams over 90 meters, but inside of that was 48 meters at 2 grams. 2 grams over 100 meters, but inside of that is 5 grams over 24 meters. So once again, there's a fairly, as you move away from the andesite-dacite contact, the grade seems to drop off, but there's a fairly good halo that encompasses and surrounds the higher grade hits. Where we end up putting the cutoff grade for an eventual resource estimate is still up in the air. We still got to do some economic studies on that. But what the takeaway from this is that the cutoff grade will not be sharp. We'll be able to move cutoff grade depending on where gold price is and depending on what our mining parameters are, to be able to maintain profitability through almost any gold price, simply because we have the flexibility and we have mineralized wall rock around some of the higher grade things. To give you an idea of how we have expanded the mineralization, in 2013, this was sort of the lower grade mineralization. We put together a resource estimate. In what's shown on this slide is approximately 1.5 million ounces at about 1.6, 1.7 grams per ton in the stippled area, based on this drilling and the drill holes that you see there. What we've highlighted are some of the higher grade hits that we had in the pit. You can see that for the most part, they're about 100 meters apart, which means they don't have a large influence. But in 2015, 2016, and now in 2019, we've moved on to expand some of those higher grade hits into what you see on this slide, which is showing that we've got higher density drilling in some of these feeder zones, and that we have certainly put together or showed continuity, I suppose, of the higher grade material within that old outline. So once again, this old stipple outline is the resource estimate from 2013. These are the new drilling where we've shown that there is obviously higher grade material that wasn't adequately calculated, I would say, in the initial resource estimate. The proposed pit outline is still there as well. I think it's safe to say that that as time goes on, this was the pit that constrained the initial resources. This was material that was underneath the pit. This was about 1 million ounces in the pit, about 400,000 ounces below the pit. But I think it's safe to say that if we redid the calculation, this pit boundary would most likely be drawn down to encompass some more of this high-grade material. The 2020 drill intercepts, this is part of the section that we put out on Monday. Just to go back one slide, what we're looking at is just this part of the pit now on this slide. The 2 holes that we put out from target C on Monday are highlighted in yellow, about 18 meters at about 10 grams, and then about 100 meters below that, we had about 10 meters at about 13 grams. You can see that in zone C, it's certainly open. It may be open in this direction as well. There's absolutely no drilling over here. We intend to keep following that down because that's certainly adding ounces quickly. 10 meters at half an ounce can add ounces quickly. Some of the other hits that we had over on the east end of the pit, this is one that we put out on Friday. It was about 100 meters at about 1.25 grams in an area in the pit where previously we had let's say, lower grades in the initial resource estimate. As a result of that, we think that this will certainly increase the block model in that area. But what we have done is we have certainly expanded the areas between A and B, these 2 high-grade feeders in that area. At this point, before I start talking about the oxide, I'm going to stop the share on this because I want to bring up a 3D model of I think on your screen now you can see the 3D model of that pit that was that contained the pit-constrained resources. Effectively, the high-grade zones are shown in these red areas in the bottom of the pit, and the initial resource envelope is shown as well. You can see that that both C and B sort of bleed up a contact. That's the contact between the andesite dacite, and then the massive sulfides at A trend off towards the east-northeast. You can see all the drilling that we put into this zone as well. But one thing I would like to point out is that at target C and at target B, these are now moving away from this contact and are becoming more subvertical. While if we spin and look over at A, which is the massive sulfides, which is still open to the east, there's no drilling over in this direction, but it's getting a little bit more difficult to follow simply because it's blind drilling at this point. But you can see that it comes off at a different angle as well, although it is plunging down the andesite-dacite contact and following the andesite-dacite contact in that direction. But it is still wide open off the end of the pit there. So once again, I think that if we were to redo the estimates, I think that you'll see the pit would fall and probably pull in some of this material. But once again, we'll have to do the economic studies to understand the difference between open pit mining and underground mining and the cost differences. I would also point out that there are a number of hits in this direction, which is further west from where C is, that haven't been adequately followed up. They're also about 100 meters apart, and you can see the hits that are on those drill holes. That's an area where we need to do more drilling as well to see if there's yet another feeder in this zone. There may be. Something that came out of the press release that we put out on Monday also showed that underneath C in this area, there was a very large anhydrite halo or cloud, and it's very similar to a large anhydrite halo that we get above the massive sulfides over at the east end of the pit. There's very little drilling that goes into that area, and we'd like to drill that, this area down here, in order to see if there's more of that massive sulfide. So that there's some exploration potential, I guess, is what we're getting at there. Once again, if there's any questions, feel free to type them into the Q&A box, and I'll try to answer them as we go along. Otherwise, we'll open it up for questions towards the end. Before I move on, though, I would like to talk a little bit about an oxide target that we have that sits on top of Candelones Hill. This oxide is generally running about 1 gram per ton. It was initially in 2011 had about 112,000 ounces at about 1 gram per ton. We've done a significant amount of work since 2011, both in trenching, pitting, and a series of drill holes, which what's shown on the slide here are test drill holes that we put in late last year in order to assess the oxide from the oxide to the transition boundary. Most of these were 20 to 30 meter deep holes, but went down the bulk of it. If you look at the contours that are underneath, this area is actually a hill. It's Candelones Hill. The oxide drapes over the hill, and then comes down into this valley at the bottom. In reality, this isn't a pit, more than let's say a soil stripping exercise over top of a hill. The strip ratio on the pit is about 1.3 to 1 in the initial resource estimate that was done in 2011. But most of that stripping was in-pit waste, is what I would call it. Some of our work, and you can see the trenches that have been put in, have converted some of that waste into what is potentially ore, or would probably fall into a mine plan. The results of this drilling that we did showed that the mineralization is remarkably consistent. In some cases, we get up to 20 meters at 4 grams, but for the most part, it's a 0.5 gram to 1 gram in the oxides. We started, part of this program was to collect material for metallurgical testing. We completed metallurgical testing on the oxide that we had collected and got about 90 to 95% recovery fairly quickly in about 24 hours. We've since moved on to doing column tests. We need to do some trade-off studies to understand whether this material is more economic in a heap or whether it's more economic going through some kind of tank leach with CIP. afterwards. But our conceptual target on this, we'll redo a resource estimate once we understand the metallurgy. But our conceptual target at this point is something on the lines of about 120 to 150,000 ounces within this pit outline, or within this within this area. There is some room to expand this. There wasn't any drilling done in this area to the northwest, and there's very little trenching out there. So there's a little bit more work that could be done to expand this. This is the conceptual oxide target. Once again, we would be guiding to 120 to 150,000 ounces in that area at an average grade of about 1 gram per ton. That pretty well wraps up the presentation. We own our own drills in the Dominican Republic. They're currently at our camp on since the country's on lockdown, but we've been able to operate at about $125 a meter as an all-in cost, and able to do about 1,500 to 1,800 meters per month per drill. So when we've got 2 drills operating, it's about 3,000 meters a month. We've certainly done that since October. I think we're over 12,000 meters since October. We've got an excellent safety record, and we still have about 98% of our workforce comes from the local area. Our Dominican drillers are some of the better drillers that I've certainly worked with globally, and they seem to get very good production with an excellent safety record. And we can't hope for more. We've got strong community support in the area. The community certainly enjoys our presence, I think. They'd like to see this project move ahead, but we've got to go through baby steps in order to get there. That pretty well wraps up my presentation. And I would open it up for question and answers. If any of the attendees have any questions, the easiest thing is to type them into the question and answer box, and I'll try to answer them as we go. But one of the questions is, how much has the high-grade footprint expanded since the 2015 resource? Certainly the envelopes have changed dramatically since the 2015 resource. I would suggest that the massive sulfide material, or the area where the massive sulfides are, has probably doubled in size since the initial 2 or 3 drill holes that were in there. We've extended that to the east and to depth down plunge as well. In Target B has at least doubled from the 2 drill holes that were in Target B. I suppose the easiest way to show this is to go back to the resource envelope on slide 18. This is all we knew about Target A. This is all we knew about Target B, and this is all we really knew about Target C at the time in the 2015 resource estimate. It wasn't until after we put out the 2015 resource estimate that we went back and started drilling in late 2015 and throughout 2016. And what we've done since that time is move this. You can see that certainly Target A has doubled, certainly Target B. And once again, the projection on this, on Target A, is a little bit off, if you recall that it's sort of going away from the page and out of the page. But certainly Target A has more than doubled. Target B has probably doubled in size. And Target C is much larger than it was. Certainly the higher grade areas are much larger than they were in 2015. So without trying to sound too coy, I'd say that there's been significant improvements to the high grade resource that we had available between 2015 and 2020, and those high grade resources are, I think, very important. As what I like to say is that I would rather mine 100,000 ounces a year at $1,000 margin than 1 million ounces a year at $100 margin. They end up being exactly the same amount of cash flow, but the flexibility for a low-cost producer, which of course means high grade, the flexibility for a low-cost producer and the ability to survive low gold prices is much better. There's another question in the box about what kind of strip ratio we'll be looking at in the open pit. I think the easiest way to talk about that is if I go to slide 24, which shows the inferred mineral resource from 2013, which was the pit-constrained resource. It's the top part of the box. The oxide portion itself had a fairly low strip, as I said before, about 1.3 to 1. The sulfide portion at Candelones Hill also had a fairly low strip, but when we went into the open pit, the strip ratio got fairly large based on this block model. The drilling that we've done has shown that some areas of the pit that were considered to be waste or low grade probably can carry probably carry and contain gold that would come over our cutoff for an open pit mine. The cutoff here was about 0.56 grams of gold per ton. I would think that I would like to think that we've reduced the strip ratio, but of course, if we pull the pit down to get higher grade material, that's going to require laybacks at the surface, which may change the pit ratio as well. I think that the only things I can really say at this point is with the pit constrained resource that we show here, our strip ratio in the pit ended up being an average of 5.8 to 1 or about 6 to 1 for the pits. I would like to think we've reduced that, but once again, we'd have to wait until we actually do the pit engineering and the pit constraint again, because as the pit goes deeper, of course, it gets wider at surface. And we know that certainly at the connector zone, there's very little mineralization that outcrops at surface. So any pit expansions at surface would be higher strip ratio. I think ultimately what will happen, though, if you excuse me for a moment, I will go back to the 3D model. I think what will ultimately happen is that these areas will most likely be mined by open pit. They're relatively close to surface. They start at about 50 meters below surface at the west end of the pit and come down to about 130, 140 meters below surface. Once again, we haven't done the studies, but conceptually, I would say that those areas may end up being in the open pit. The strip ratio will be much lower. The strip ratio gets fairly large as you get to the east end of the pit. And I think some of this material, which is high grade, both in the massive sulfides and in the B zone, may be more amenable to an underground mining method. It's certainly thick enough. It's 10 to 20 meters thick in places, with fairly good consistent grades between 5 and 10 grams per ton. That may be better extracted by underground and may be more profitable to do so. But until we do the economic studies, it will be difficult to say what the best method is for mining that. So the strip ratio, I think we'll have to wait for our next economic study. When we did the initial resource estimate, it was done simply because we had drilling at 100-meter centers, and we're looking at an open pit model at a low grade. Now that we found the high grade material, that opens a number of options for us. I think for a moment, when it comes to the open pit versus underground as well, I think I can probably comment a little bit on the metallurgy that we've done to date. We collected part of this program in early October was to go in and collect sufficient material of sufficient type to start doing flotation studies on and recovery studies on the gold here. There are, as I pointed out, there's 3 different styles of mineralization here, all of which have different characteristics, different grain sizes, different gold, gold associations, gold with quartz, gold with pyrite, gold with chalcopyrite, and to find one method to treat them all is the objective of our metallurgical work at this point. We've done preliminary studies on the sulfides. They're not complete; they're still underway. But on the sulfide samples that we treated, we found that we can float a pyrite concentrate and recover a fair amount of the gold into the pyrite concentrate. In 2 of the tests, we managed to get between 85 and 95% of the gold going into a pyrite concentrate. Now, the next step, of course, is to take that pyrite and see if we can cyanide it to get gold at site. The next stage of our metallurgy is to try grinding those sulfide concentrates and cyaniding them down. That work is beginning this week, and I would hope that within the next 4 to 6 weeks we should have final results from that. Hopefully sooner, but I would guide towards the middle of May before we have results from that. But I'm cautiously optimistic. Some of the ChemScan studies, which is scanning electron microscope study of the gold grains, show that between 85 and 95% of the gold grains are liberated at about a 75 micron grind, which implies that cyanide should be able to see them and should be able to dissolve them. Once again, we'll have to complete the studies and make sure that we can do that, and that's underway now. So once again, we're cautiously optimistic that we'll be able to crack the metallurgy on this and be able to produce gold on site. Micon is handling that work for us, and they're supervising the tests as well. So we'll have to wait and see what they're able to tell us in the next month to 6 weeks. There's another question here, so giving some color on the direction of the gold price because of gold price volatility. It's interesting question. Part of my previous life was as a gold analyst, and I used to have to predict the gold price for a living. But as I said at that time, if I could predict the gold price, I wouldn't be working anymore. However, I think a couple of things that I see in the gold market now is, low oil prices are an economic stimulus in any other time. If it wasn't for a pandemic, low gold prices would be driving the economy to ever higher levels. But in conjunction with COVID-19 coming in, the amount of economic stimulus and the amount of money supply that's being poured into the global economy is unknown in our history. I think that those two stimuluses, both low oil prices and inflationary money supply and monetary policy, really can't do anything but drive the gold price up. There was an interesting article I read last week that said part of the reason why the gold price was getting hammered down when everyone thought it should be going up was because producers were selling inventory as quickly as possible before they shut their mines down. And we're trying to forward sell some of their inventory. That makes sense to me. I think also in the last few weeks, people have been looking for cash and liquidity wherever they can find it, and that may mean selling their gold positions as well. But ultimately, I think all of the economic stimulus that's being put into the market in conjunction with low oil prices will do nothing but inflate the economy and most likely inflate the gold price as well. So my outlook on the gold price for the next couple of years is up. Once again, I was asked as an analyst whether I thought the gold price at that time would ever make it to $1,500 an ounce. At that time, it was trading at about $300 an ounce. And my response to it was, I don't know if it'll ever make it to $1,500, but I do know it has to go through $700 to get there. So my response today would be, I don't know whether the gold price will make it to $3,000 an ounce, but it has to go through $2,000 to get there. That would be my answer to that question. We're optimistic. Obviously, we wouldn't be in this industry if we didn't think the gold price was going to go up and be higher than it is today. I hope that answers most of your questions. I don't see any other ones available, but by all means, if you have any other questions, enter them into the question and answer box, and I'll see what I can do to answer them. If anyone has any questions, you can certainly contact me or through the Unigold website, and I'm happy to respond. So by all means, get back to me. With that, I think I'll end our first webinar. We'll try to make this a regular occasion as we put out information and news. It's probably easier than getting into a face-to-face meeting, and hopefully as time goes on, we'll be able to get them a little bit faster and a little bit better. So thank you very much.
Yeah, if anyone has any questions, feel free to email me or Joe, and have a great morning.